Hey traders, Crash Alton here, bringing you an overview of the impact trading system. Today is the 27th of February 2024. We've got several traders from our Discord channel, our trading room in the room here. We're going to go over the impact trading system. I'm going to give a quick disclaimer before I start, just to get it out of the way for legality. Please recognize I'm not a professional. I'm not giving trading advice. I'm teaching you how I trade my system, so that hopefully it's an advantage for you while you're trading throughout the day. You got to do your own research and take responsibility for your own wins and losses. All right, the impact trading system, guys, is a multi-technique based system. Most of you know this, but there's 4 components. All right, we're going to go over the NAVDAR, which is a time and price based cycle methodology, the iStructure, which is larger structural time frames, iSnipe, which is shorter structural time frames, and the difference between the two is that iStructure is designed with specific trade setups. There's about 15 setups that we have, and a majority of them are designed to give you 50 to 100 point trades, while the iSnipe is designed to be more of a sniping for dummies type situation. It's designed to provide 20 to 40 points per trade, but when done right and in conjunction with iStructure and with NAVDAR, it can also give you 100-point trades, and we'll show a couple of those where we can just basically follow the yellow brick road to the path of profitability. The NAVDAR is our secret sauce, all right? This is an advanced price and time cycle rotation methodology in the same way that a pilot does his flight plan before flying, and then he uses navigation in his radar system, thus NAVDAR, during flight to find specific points in space, right? In similar fashion, the trader creates his pre-flight flight plan, which creates a game plan on searching for specific pre-identified price targets within a defined time window. But the interesting or the great thing about that time window, it's predictive, all right? It's not lagging, it's not following. We identify price targets on our iStructure chart at the beginning of the day before RTH. It can even be used in the evening time during Globex, but at the end of one day, we update it so that it can be used at Globex after close and for the next RTH. And then we give windows of opportunity that are down to sometimes 15-minute windows throughout the day where we think we will find a high or a low in that specific pre-identified time frame. All right, the 4th component is the bookmap trade setups, all right, and that's basically us incorporating our own specialized use of bookmap, specifically highlighting the bookmap market pulse indicators that are in beta mode right now. Our contact information is here on this page. If you want to get more information, you can reach out to us via email or any of our social media channels. All right, so that's enough of that. What we're going to do real quick is we're going to go over iSnipe demo, okay? And I specifically want to start off with this from yesterday, because yesterday was Monday the 26th. It was a balanced day, meaning there was not a whole lot of price movement above and below the point of control, but it was very choppy, all right? And that choppiness made it hard to trade if you didn't really have a pre-identified game plan. And so what I really want from everybody in this room is to understand the power of all 4 components individually and when working together. So what we're going to actually do is we're going to pull up an Excel worksheet and we're going to track some stuff. So hopefully you guys have a pen and paper, because I'm going to ask you guys to take some notes, okay? And basically what I want it to look like is something like this, where I'm going to show you yesterday, Monday, and then we're going to do this together for today, Tuesday, just to see how it is. But basically, I want to track by date the number of valid first touch trades, okay? The points provided that were possible to have gotten, how many invalid first touches we had, and what the win rate was. Now, we have some rules, okay, around our trading system. And basically, our trading system says this for the iSnipe system. All right, there's a couple different ways, but we're going to show a conservative way to trade it. When doing it the way we've talked about and the way I'm showing now, we literally have an 80 to 92% win rate. like every day, all the time. So if you only wanted to trade the iSnipe, you could just do that. All right, and it would guide you to having multiple wins throughout the day. The rules are with two different patterns or two different techniques, and a conservative and an aggressive. We're going to go over the conservative today. The conservative one is basically saying that during RTH time frame, from 10 Eastern to 1600 market close, which is 7 Pacific Standard Time for those of us that are West Coasters, the primary window is between 10 and 12:30 Eastern. The secondary window, the second window of the best opportunity, is from 1400 to 1600 or 11 to 1300 Pacific Standard Time. If you trade after hours, but before the European opens, you can do the ITS 6 and 10 entries. But for today's purposes, what we're going to do is a more conservative approach, which is a first touch, okay, of trades on the ITS 15, 20, 31, 35, and 45 line. Actually, I'm going to take the 35 out of there, and I'll talk a little bit more about that. It's going to be the 15, 20, 31, and 45. Taking a short or a long every time we do a first pullback, first touch of each one of those lines throughout the day. You can trade the 4 and 6 if you want to once you get more expertise and quicker at sniping, and you have a good ATM strategy that will automatically take you out at 5, 8, or 10 points, somewhere in there, so that you start working with the dealer's money and then have some profitability to let the winners run if they go beyond and the opposite 4 and 6. And again, I'll go in a little more detail about that. But we want to reduce the noise of the 4s and the 6 to give you the higher winning rate, particularly in choppy days or on days which are purely trending up in one direction, and you never really have big pullbacks, and so you're just constantly getting these 4s and 6s, and then you try to counter trend against a pure straight up day or a straight down day. So for today, we're going to look at the first touch only rule. Okay. Your targets are going to be one of two ways. Okay. You are either going to enter on a trade. Let's just start with this one since it's big and it's in the window. When I say enter into a first touch trade, okay, here's the ITS 20 line, and you come down and you see a fractal, this is a Bill Williams fractal, develop on the reversal off the touch of the line. Now, I'm showing this to start off with because you have two ways to exit. The way to entry, okay, is very easy. It is a first pullback, first touch of every 15, 20, 31, and 45 line. As far as exits go, what you need to understand is that after you enter off of a bounce with a fractal developed, as soon as the fractal develops, you get in. That's the most conservative way to get in, or you just do it when it touches. You get in, and the goal then, okay, 85% win rate would be for the bull line. So now we're buying the market. And again, the whites, blues, and greens are the support lines. The yellows, reds, orange, purples, and pinks are the bear lines, the negative lines. So I'm not teaching like all the finer details of the snipe. This is for somebody who already has a basic understanding of this. This is more detailed for people who already have a little bit of practice, but we're going into how to use it a little more specifically so we're a little more profitable and we keep from getting chopped up. We can do more of a beginner's lesson for other people on the next episode. But for those who are in the market, in the room today, trading the market with this system right now, we buy off the line, okay? We get the fractal, we buy. The first 2 points of the first 2 exit points is either A, the first touch of the 4, or the first touch of the opposite 6. And then you let your winners go to the third touch of the next line, or you trail stops and you let them continue to run in case we get a zoom or we go to the 20 or the 31 in the opposite direction. The second way to do this is if you are not fast enough to see or to process or to hit the mouse button to exit at the 4, the 6, is just to give yourself an automatic ATM that takes targets at 8, 10, and 12 points. If it's in a shorter time frame, okay, a shorter time frame where the 1 minute ATR is smaller than normal. So we have compressed volume, compressed range. Then you might want to take that first, or that ATM strategy, and change it from an 8, 10, 12 to maybe a 5, 8, 10. Is everybody clear on that so far?
Yes.
Please feel free to give feedback. Yeah. Okay, so entries, first touch, bounce with a fractal. Exits are either A, 4, opposite 6, opposite 10, or 8, 10, 12. What I think is the best is if you can learn to follow these and get a feel for the way the rhythm of the snipe system works. You can then sometimes actually wait until the 6, because we have about an 85% chance that you're going to actually go to the 6. But again, I put the first one in here so that we start working with dealer's money. So I recommend you start off taking it the opposite 4, then the 6, and then you get a little bit more comfortable with reading the market, like reading order flow through the system. You can sometimes hold it to the 6. I would always recommend you take some at the 6 for sure, no matter what, no matter how good you are. That's where you need to take some off regardless. Then that one that if you had it at 12, right, 8, 10, and 12, as you see this come up and you realize that you're actually getting a good bounce and it's coming away with some momentum with a little impulse, you just move that 12 up a little higher, and then if you trailed out, let's say you start off with 6 micros, maybe you got rid of 2 at the 4, you got rid of 2 at the 6, you raise the last 2 up, and then you just keep trailing your stop until as it gets to the next line, then you raise it up to the next line. Or you just stay one line behind it and see what's going to happen. So in this example, if you did that right, you come here, you let it bounce, retrace back, it comes up. Once it breaks above there, you raise your stops up to here. It comes up to here, it bounces back to the 6, so your stops are right about here, and then it continues up. Because it never goes straight up and straight down, right? We're always getting these inflections. Every now and then, we'll get an impulse move like here where it goes through 2 lines, all right? So that does happen, but in general, you're going to get some ebb and flow. So you don't want to raise the stop too quickly, too fast. You want to give it a little bit of breathing room. Now, I'm not going to go, I'll talk about long-term trends and catching 100 points on this system at the end. Right now, what I want to do is just look at it from a pure sniping point of view. So if we looked at that snapshot on the Excel spreadsheet that I gave you yesterday, we had 13 structured setups, which we're going to go over here. They are highlighted with the pink ellipse. 12 out of 13 of them were valid winning trades. We had a 92% win rate, 12 divided by 13, and these gave us 261 points provided of opportunity. I rounded down, so like for example, if I calculated that it gave us 14.25, just due to drawing error a little bit here, I rounded down to 14. If it was 18 and a half, I rounded down to 18. So we could have got a little bit more. And you might have gotten a little bit more if there was a situation where we got a 100-point runner that came really quick from AM cycle to a low cycle, and we followed the, our normal system of trailing the next ITS line behind where you got the entry, and you might get even more than that. But again, this is just sniping. So let's look at this. Okay, the market opened at 6:30. We said we don't start until 7 o'clock Pacific Standard Time. So now, 7 o'clock Pacific Standard Time, we are actually breaking out of, a consolidation pattern that we had actually had talked about, where we came up, flagged down, we created this box, and then we talked about buying when it broke out of this area. So hopefully, just from a market understanding, we would not have taken this trade since we just broke out. But let's just say for argument's sake, we stick to the rules. After 7 o'clock, we took the first 15 line, right? That would have been here. We would have come down here and we would have only hit the 4. So it did not come to the 6. Now, if you're fast enough and you take some off at the 4, then yes, this one could have been a winning trade for about 12 points. So if you had an automatic ATM that took out 8, 10, and 12, then that actually would have been a winning trade for at least part of that 12-point move. I did not count it, however, though, because it did not go to at least the opposite 6. For every other ones, I'm counting, this goes through the, just like you see up here, a bounce up here, we see a fractal. Now remember, everybody's data, we've talked about this for the last 2 days. People have Rhythmic, people have Ninja Continuum, people have Denali with Teton order and service through Sierra Chart, Trade-Evade. I mean, there's a bunch of different data packages out there. So our lines might be between 2 and 3 points different from each other. So there's always, as the understanding of the market goes and reading order flow, you got to have an understanding that sometimes we'll have a proximity rule. And for me, that's close enough for government work, right? To see a fractal bounce up all the way up here off this impulse move, pull back, go all the way back up with a second leg, so this little A, B, C pattern, I'm going to take that fractal and I'm going to use it to buy down the other side. So in this particular case, we have a fractal develop with a proximity rule to the 20. We take it and we get 14 points all the way to the opposite 6. Now, our rules are from stops. We didn't talk about this yet. Our stops are 12 to 15 points. Okay? 12 to 15 points. If you had the gumption to trade a little bit smaller and hold for a little bit longer, and you used a 25 point stop, okay, you would have a 92% win rate. 92 all the time. If we use what we want to use, which is 12 to 15, then that's going to drop us down to that 85, sometimes 80, depending on just how condensed a market is or how choppy it is. But in general, we really don't need to have a stop more than 15. So if I was to put a stop here, okay, at 12 to 15 points, all right, that's going to put us up in this area. So even if it came to the 4, the opposite 6, I say I didn't get out. I was hoping for an actual touch. It bounced up against me. Well, it hit these 2 lines, but I'm not looking at the 4s and 6s, right, on the opposite side. I'm looking for trades this way. If I held that 12-point stop, I don't even need a 3-point stop. It still came back down and made the move to come back down again closer to here. So sometimes it'll come a little bit short, bounce up, and we'll look at a couple other examples. I think the max stop we needed on this particular day was actually a stop of 11 points. So let's look at the next one. So that's one invalid, one valid. Excuse me, one valid. Now we look across the lines here, and we want to find the next 15 or 20. Where is it at? Over here. Because what happened is market comes here. We did a first touch. We're not looking at second touch right now. We know we're in an up thrust. We're just sticking to the rules. We're waiting for it to come back to the 4, 6, 10, 15. That's good enough work for me for proximity rule. I buy that off of a fractal. I go to the opposite 4, the opposite 6, and then opposite 10. If I let my winners run and I left my stop down here, or if I left my stop below the next ATR below the 4, which is the 6, which we tend to follow, then I would have never got stopped out, and I could have actually had it come up all the way to here. But let's just say we did the opposite 4, 6, and 10. That gave us 18 points with potential for more depending on how we played this out. But at a minimum, the first impulse move really took us to the 4, 6, 10 right away for 18 points in a very short order of time frame. Now we're looking for the next 15 or 20. These are all 4s, 6, 4s, 6, 10, 4, 6, 4, 6, 20. Here's the next one in line. Why did we not take this 15? Our rules say take the 10, 15, and 20, but our rules on 2 additional factors is we are looking for a fractal, right? That's going to come through here. And we would really like to see the color bars start to change a little bit. And we have nothing but pure red with this huge impulse move down. All right? So it blitzed through here and didn't even come to a place of stopping. The first place that it really came to stop was the 20. So I'm not counting this as a valid trade entry. Now, you could say, proximity rule. Would I have taken that? Well, okay. So let's say you did, and you put your stop right below because we don't need more than a couple points. Or we don't need more than how many points? 12 to 15. Let's just say you did take it, okay? You did take it and you put a stop at 15. Right there. You may have been able to get there and bounce back still and had some points off of that. So that one is a very close situation. But again, hopefully just by seeing the color bars all negative, it blitzing through with speed, right? There was no, this is very clear in my mind that this just cut through that one. So I didn't count that one. So now we come down to the 20. First touch, 4, 6, 10, 15. Okay, that gave us 27 points. Where's the next 15 line? It's here, which happens to be the reversal of where we just were. Enter in with a fractal on the opposite side, coming down the opposite 4, 6, didn't get to the 10, so we'll just take the 15 points that it gave us to the 6th line. We still made it to the opposite 4, the opposite 6. Now we continue to go sideways here in time. Alright, come over a little bit more, put that on the left hand side. So, this is the last one we finished. Now we're looking for the next 15 or 20. These are 4s, 6, 10s. Looking for the 15 or the 20 down here, both in proximity to each other. Comes down, tags it, bounces up through the first 4, through the first 6, gives us 14.75 points right there. Depending on where you put your stop. If you used an 11 to 15 point stop, and again, it just depends on how you want to play this, then you could have actually taken this trade and had it come all the way up to here. So again, it depends on how comfortable you are and how good you are at trailing the ATR line as we go up. So just as an example, what we like to say is that after we talk about the first touch rule, right? First touch of 4, 6, 10, 15. Well, we're talking about entries into the first 15, 20, 31, and 45, but at the same time, we do not want to lose sight of where the 4s and the 6s are. So in this case, we have a double line down here, all right, showing us probably some really good support. And we already bounced over here one time. So we have a new line here, which is why we're taking it, because we're not doing the second touch rule just for today's purposes. We're only doing the first touch rule. First touch rule of this line right here, kind of a double bottom pattern. If you were to allow it to go up with an impulse move, come back and touch the first touch of the 4, and then bounce up, and you just continue to raise your stops behind the 6 line, you would never have gotten stopped out till right here. So you actually could have made that entry by following the next line underneath it, the 6, all right, and had a 47-point move. Any questions on that setup right there? Because I want to make sure that this is completely clear to everybody.
No, it's clear.
Nope, I don't have any.
Okay, good. Making sense so far? So,
Yep.
now we're looking for the next 15, 20, 30, and 31, and 45. Here we go. So we take this trade. What do we say our stops are? 12 to 15 points. Okay. Now, the thing about this is sometimes it gets a little undaunting looking when we have this much distance between one ITS line and the next, okay? So that's like 29, 30 points. But all we have to say is we're sticking to our rules of a 15-point stop, okay? That's 12.5 points, and we're still within our 12 to 15-point stop. Now, so far, everything I've showed you been within a couple points. Here's the biggest outlier of the day, all right, while we're making a topping pattern here and coming down from an AM high to an AM low, or a lunch high for the East Coasters down to a low. So we're still within the parameters of taking a first touch rule. Yes, it bounces down against us. It stays within our stop entry. That's why we have this back tested to 12 to 15 points for an 85% win rate. It comes back down, touches the opposite 4, opposite 6 at a minimum, and then continues of all this momentum that's built up here to do a pullback through the 10 and then down to the 15. So your technique on whether you stay in here or not and trust the system If you did trust the system, yes, at a minimum, if you took points off at the opposite 6, you're looking at 8 points. If you let your runners run, then you could continue down to the 10. Now drop your stops down to the 4 or the 6 and just continue to let it move. If it blitzes down below the 10, then you continue to raise your stops down here. Then it comes down here and you decide to get out, or you let it come against you depending on where your stop is. But since we're playing first touch of each rule, you would know you are getting out here for sure, because we're teaching a first touch, first pullback, and how many points trading for dummies, sniping for dummies, this system works for. So this was valid, came down here. Now I'm going to just clear off a little bit because I don't want to gum up too much of this. Come down here for, what do we say, why do I have 2 lines here? Oh, that's because that's for the stop there. Okay, so again, all the way down here, that provided us an opportunity of 27 points. Now, first touch of this 15, opposite 4, opposite 6. If you held it with your stop below here, okay, until it passed the 6 again, then you would have been able to take it all the way up here for some more points. Again, your technique, but just sticking to the rules of that absolute minimum of the 4 and the 6, that gave us 16.5 points. Now we look for the next line, same thing, entry in, got the fractal, opposite 4, opposite 6, opposite 10, that gave us 21 points. Looking for the next 15 line, opposite 4, opposite 6, opposite 10, opposite double touch of the 20 for 26 points. Looking for the next major line, here we go, 2, 4, 6, 10, nope, 31. Okay, so the 31 line here, fractals off of this, 4, 6, 10. Let's just say we trailed it up to the 10. We could have done maybe a little bit more, but we got 24 points out of that trade. Now we come up here, we're looking for the next one. Bounced off the 31, we're looking for the 6, the 10. Bounced off the 4, 6, here is a 15. Now, we had a very strong move here. It shot through here with no fractal till here. I do not count that as a valid trade. Okay? Do not count that as a valid trade. Because we did not get a fractal in proximity to bounce off of to come down. It went straight through and basically came up to here. So if we take this 20, opposite 4, 6, 10 for 28 points. Okay, we don't have any more until all the way down here. First touch of this one, opposite 4, 6 for 16 points. Tag that, did not go above it, so we would have had a minimum of our stops down here at 10 to 11 points. Hopefully when it came up to the 6, we raised our stops to at least break even, so we would have lost nothing more than getting that amount of points up to 10, 16 points and a stop out at break even. All right, and that's pretty much market close. Any questions on yesterday? On anything we just reviewed?
So one question that I've got is how often do you take multiple touches of a line? Like for instance, in the area you're at right now, the first one comes in around 8:07 of the first touch of the 20, and then you get a second one at the 20, and then further down at 10:02 you get another one. So how often are you taking multiple touches of that?
So we can track those stats as well. They end up being very good. What I like to do, Matt, is I like to combine what I'm seeing on iSnipe with what's happening on iStructure, okay, and the Navdar system. Let's just say we think that we're going up from one cycle turn to the next, and so we have from a time point of view, we have the perspective of an upward move. Let's say that we had price targets up here, okay, at the 1848, and if I remember correctly, we did. We had multiple confluence of price targets that were up here. So if I'm that close to those price targets, and I think that the Navdar system is telling us that we're in an up cycle trend, then I will be more prone to taking the second touch in the continuation of the trade. Now, the other thing that gives me a point of confluence for taking this second point of trade is that I actually get a large development of bull lines on top of a larger bull line. So you can see that I have the 15, the 20, and the 31 and the 35 all building up below as support, right? And then I also have the 4, 6, 10, and 15 build up immediately on top of the 20 again. So to me, that's a very strong confluence for taking a second attempt shot at doing it. And just so for the record, we do teach that you can take the first and second touch of the 15, 20, and 31 and 45. I like to do for the second touch, maybe cut out the 15 a little bit more and go for the 20. But it also depends when you're looking at a average range on a 1 minute tick chart and you're looking at the VIX. If the VIX is high and the volume is high and we are just bouncing, and you can just see that it's just bouncing very well, right, from the main structural lines to the next structural lines, and it's just doing this boom, 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 and you're starting to feel that rhythm, and you can tell, yes, it's going to want to bounce again. All of that comes to the confluence to make a decision whether you're going to take the second touch or not. Does that answer your question?
Perfect. Yes.
I think if you take the second touch rule, the statistics are going to be slightly different based on what kind of day it is, what the VIX is, and what the volume is. So on a trending up day, you're probably not going to see that. On a trending down day, or a straight down day, you're probably not going to see that. That the second touch rule is going to be more applicable for more two-way trade type days. So the two-way trade type days, you'll see it just by price action, but you'll also see it, for example, on our cycle days, a cycle day 2, okay, out of a multi-day cycle. When we teach our Navdar system, cycle day 1 begins with some kind of drop from the last day of the multi-day target to the beginning of the next one. We find a bottom on day 1. Okay, we bounce up sometime in Globex or on day 2 of a multi-day cycle. What the cycle statistics show is that you have a pullback on day 2 to somewhere near the low of day 1. So day 2s of our multi-day cycles tend to be considered two-way trade days, because we're bouncing up a little bit from where the bottom was on day 1, but we're also coming down to retest to double bottoms, quote unquote, right? The lows that were established on cycle day 1. And then from there, we actually want to bounce up again to go fulfill the multi-day targets up higher. So that's why cycle day 2s tend to be considered more two-way trades. And so you'll see more chop action on cycle day 2s because of that phenomena. Over 12 years of history, there's a 90% odds that at the end of the multi-day cycle, we will end in an uptrend above cycle day 1 lows. Okay? So if we establish a low on cycle day 1, by the third day, we will 90% of the time be above the low that was established on day 1 of that multi-day cycle. 90% of the time. So that's kind of how we look at the market, and that's why I say that about the cycle day 2. So that's kind of a long answer to your question, but it's not so easy to just answer it with one word answer, right? Because the market is dynamic, and we know from our expertise and from our experience that we are believers in the multi-day cycle and the multi-day intraday cycles. And so our combination of the CD series along with the S series gives us a feel on what kind of days we're going to have, which lends to being more inclined for a first touch or a second touch type opportunity day.
Makes sense.
Any other questions? On this day, I'll close this video out if there's no other big questions, and we'll go on to the next one.
No, you did great explaining everything. Thank you.
Okay, I'm coming to a pause on this.